Hello everybody, my name is Nicole and I'm a technical analyst and private investor. And today I'm going to warn you that I am keeping well away from all US equities and indices because not only are they terribly frothy, but Friday week, the 18th of December, is triple witching hour when a whole host of US options and futures on individual stocks and on indices are going to expire just ahead of Christmas. So you can imagine how thin the markets are going to be. With that in mind, I've decided to turn my focus today onto China, because yesterday they announced that consumer price inflation in November had dropped to minus 0.5% from plus 0.5% in October, and their producer price index in November dropped to minus 1.5%. Today in Japan, their producer prices have increased their deceleration to minus 2.2%. Now, the big worry here is that these two international trading mega characters are going to export this problem all around the world. I mean, we see it already in the European Union. Absolutely. We've got deflation now. That's what you've got to worry about. Why the ECB, for goodness sake, is talking about overshooting their inflation targets. I mean, that's purely delusional. So my first chart is the CPI inflation itself. This is, I hope you can see it all right. It's a rather dark style chart. It's not something I often do. But you can see that we've got from the early stages of the sort of China as an emerging market country, where you had huge moves. Now you can see it's holding most of the time between just under 0% and up to 5.4% where it was in January. It's come right back down. So look at the speed of that. Very much to do with the price of food. I think the risk is that we're going to see more downside as the effects of the swine flu and floods of this year move out of the picture. My second chart is of the price of the futures contract of Zhengzhou. This is coking coal. I've deliberately chosen these other two charts in that they're called the sort of, sin stocks, not the alcohol, tobacco, gambling ones in the States, but the ones with the really dirty industries, the real polluters, the really nasties. And you can see that over the last 2 months, the price of these coal futures, which are unclimate friendly energy source, have really ramped up to 750 yuan per metric ton. A monthly close above here would, I think, see a major breakout for a contract that he's been trading broadly sideways for many months now. And my target would be about 950 yuan per metric ton. My third and final chart is another dirty old soul, Shanghai steel rebar. Rebar stands for reinforced concrete bar. I use very much in the construction industry. You can see support at 3,300 yuan per metric ton has been solid and strong for the last 4 years. And I think this will also create a decent base for a rally up to the final Fibonacci resistance level and to the previous record high at 5,450 yuan, which was hit in July 2011. There we go. Thanks for watching. See you next week.